Hey, I can't complain. I was breathlessly, we made some predictions, or you made some predictions. I just kind of smiled and went along for the ride. So I was watching last night. I'm a little tired because I was watching last night if whether or not Bitcoin would, I think there was that I think it was like an 82. It was 82 or 8300. There was like a big resistance level in the low to mid 800s.
Right.
And was trying to see what would happen, ready to pull the trigger, hit it, and then I actually I honestly just fell asleep around probably 2 or 3 in the morning. I didn't really catch it. So I'm a little tired, but outside of that, I can't complain. I'm about, I don't know if I told you, but on Wednesday I was going to put in, every month I put, some money into the market, and I was at this is my March. I don't want to call it March Madness month, but this is hey, I'm ready to go in and everything on that front. So I was itching to pull the trigger. I put some in on the 6th at the top, or not the top, but at 11 grand. So that was, because I saw the potential breakout. So I did 11 grand to try to catch that, and that didn't happen. And
right.
then I got in a little bit 2 days ago at 98. And then, because there was that other level of it would either hit there and bounce back up. So I did that. And then I was looking last night and I pulled the trigger on a little bit, a smaller allocation, but I'm still curious. And actually this segues perfectly into where you're at, on your Bitcoin predictions. Right? Have we bounced? Have we hit the bottom? Are we going to shoot to the moon? Do we have more to go? What are your thoughts there?
Sure. So I think there's a lot more room for Bitcoin to come down. And I came up with a chart. And the last time we spoke, Charles, I mentioned confluences, where I look for multiple things that align in the market that may suggest a common interest or a common potential zone or target. So in this most recent chart that I've done, I feel there's pretty significant confluence there. And we're talking long term. So there's a difference between trading, how I day trade or swing trade, versus how I make forecasts. They're total different things. So, and for the people that's listening, I use a chart kind of like a frame or a body of work, but it's not a pinpoint actionable plan. There's certain things that need to actually happen in real time in the market to kind of take advantage of a plot, what we call a plot or a chart or an idea that we have that you may have set forth. So what I like to do, and just the way that I trade, is that when I see certain setups in the markets, I categorize those setups as probability areas. So like yesterday, Bitcoin had a 55% probability of going up if indeed we validated what we call a bullish pennant. That means, and all that means, and it sounds like crazy jargon, but all that means is when the market goes up, forms a high, comes down, forms a low, goes up, forms a lower high, comes down, forms a higher low. And it kind of continues in that pattern before it breaks up to a much higher high. So that pattern was potentially forming in Bitcoin. That pattern broke down. So what I was sharing with you, Charles, was that even though I seen that potential, it was what I considered a non-tradable event. I don't believe in trading low probability setups or low probability patterns. In order, and to lean on what we spoke about in the last meeting, in order to earn my money or earn my investment, it has to be a high probability pattern or a high probability event. So with that being said, there's some confluences and some agreement and some higher probabilities to suggest where Bitcoin may go. And I'll be happy to share with you guys exactly what that is. And but the kicker as far as trading, for anyone that's listening, is that you have to have your plot, your idea, but you have to execute that plot, that idea, based on real-time price action that occurs in the markets. if for anyone that wants to take trading seriously, that's how you limit your risk, and that's how you maximize your gains. I can have a plot for Bitcoin, but I'm not going to just have orders set in place for years on out just because I think where Bitcoin may end up going. So you take little bites, little increments out the market as you go. And if you're trading, the benefit is versus just buying and holding. If you're just buying Bitcoin, the only thing you can do is buy the dip. When you're trading, you could sell when Bitcoin slides down. You could buy when Bitcoin goes up. So it gives you two ways to take advantage, but it also gives you two ways to lose money. So there's always, there's always the other side. We always focus on the upside. We have to focus on the downside as well. You could buy, I believe, and I was just telling Charles that the buyers and holders are going to outpace the traders in the next 10 years on average. But if you're an excellent trader, you're going to blow buyers and holders out the water, not even close.
No, that's definitely something. Let's pull up that chart. I guess I have so much respect for you because, I might come across as someone who's got cool nerves or, strong hands. But obviously anyone can look at your strategy and there's always someone that's going to say, oh, Yusuf, you should have done this, or, oh, you got to look at the Fibonacci or blah, blah. Everyone can go on that. But I think the critical thing and why you're so successful is you stick with the strat, you come up with a plan, you then follow it and you implement it. And it doesn't sound like that tough, but it's hard. I'm sure if you're setting these trades up and you're like, oh, maybe it'll come back around, or, oh, maybe it won't, or, right. Get a few extra bucks out of it. You got to just be passionless. You get in and you get out, and it is what it is.
Right, and to lean on that, it's so easy. I have these conversations with traders all the time, and I was speaking with one trader, for instance, and he had a plot where, let's say, what he considered the sell zone was at a certain range, where that zone was violated. So basically his plot or his idea or his chart broke down. But it's really easy to come back and say, oh, after things kind of mature and materialize, say, oh, it was slippage, or, oh, it was, it's still, my chart is still valid, and here's why. So a lot of traders take their trading plans very personally. I don't. Because I know it's not me per se, it's just the probabilities that I outline. So once you take yourself out the equation, it's like, okay, if this is a high probability trade doesn't work out, why would that affect why would I take that personally? Why would I internalize that? So that's all that I do. I let the market provide the data, and I say, okay, this is data that I'm going to invest in. That's really all that it is. So it's so easy to come back after the fact and adjust things and change things and not take a position. The only thing, like I said last time, with any other trader or anybody that's doing this is that, take a position, give us your analysis, tell us what you think is going to happen in the market. And that's where traders start to thin out, because we as traders, we want it both ways. If it goes up, this is happening. If it goes down, this is happening. So, those are the challenges as far as this technical analysis stuff goes. But I'd be happy to show you guys the chart as far as what I think is probable, and if certain events occur in the market, how I plan on trading them.
Okay, so I'm getting a few comments from people and some messages. Yusuf, stop talking. Let's show the chart. We're all here to see.
Who said that? Who said that? Probably somebody I know.
Let's get down to business here, man. We want to know.
All right, let's do it. You want me to share the screen?
Yeah, share the screen.
All right. So this is the Bitcoin chart that I just recently did. And I'm going to tell you where I was, and I'm going to tell you where I am and the difference. So for the people that has followed me, I took this main downtrend, this red line right here. I'm going to move it so you can see. I took it from wick to wick, right? if you take it from wick to wick, you have a much different pattern. It's like this. So with that, it gave us a tradable event that we were profitable in. However, and again, I can't stress enough, this is the reason why I always say to keep your trend lines, keep your support and your resistance zones, because it always comes back for you. So in a trade like this, you will be in profit, and if you're a responsible trader, you'll follow your trade up as it makes newer highs. So when this trade turned around, you would still close this trade in profit. So this was still a good trade. But now that we broke this main blue line up here, it kind of calls for us to look at this chart a little bit differently. So what I did differently was I took the main downtrend, instead of wick to wick, I took it from body to body. And it tells us a quite significant story. So a lot of traders, they'll take their trend lines from wick to wick. That means, and again, the wick is as far as the market has went up or as low as the market has went down, or they'll do it from body to body, which is when and where the market closed. So if you take it from body to body, you get a much different plot, much different idea. And I would do the same all the way down here. So with this rejection, I decided to look at a different area for the bottom. Prior, I was looking at maybe 1,800 as far as the start of the uptrend. Now I'm looking at $903, which kind of makes a little bit more sense. So as I trade, when things go my way, it brings confidence in my plan. When things go against me, it makes my plan less confident. So any good trader will tell you this. Anybody who recognizes probabilities will tell you this, is that it's not about me. It's like, okay, if the market is not respecting the areas that I have plotted, then I need to, adjust and move some things. And a good trader will adjust as time goes along and as the market prints new data, prints new information. So now that the market is printing new information for me, here's where I am. So here's the Fibonacci's. So, and a Fibonacci, for those who are not familiar, is really, in simplest terms, you could just say it's areas in the market where price likes to visit or price likes to respect. There's a lot of great information about Fibonacci and how it relates even in real life. But just for this presentation, let's just say it's areas in the market that price likes to visit, just to keep it simple. So I have my Fibonacci starting at $900 and going up to $1,900, or $19,900. So the middle part, the 0.5, half that market would be at 10,400. If you see, the market respected this area pretty well. So we have all these main trend lines. This from here, starting from $900 all the way up, starting from $1,800 all the way up, starting from $3,000 and change all the way up. So we have all the trend lines. We have our Fibonacci's. So I look for things to say, okay, what is price doing? What is price telling me right now? Okay, so now that I moved this trend line, price just broke down from this higher, the highest uptrend that I have plotted. So that gives room for it to fall, right? My next target for it is right around $8,100 to $7,800, and I'll explain why. And we got really close last night, but I'm gonna explain why all of this is confluent with each other and makes sense. So to get a big, broad idea before we go into the micro views of where we're going, if you look at this area right here, this descending triangle, right, where we're forming lower highs and we have same level lows. This is a higher than a 70% probability that where we range from this, from the largest open, we're going to range that same distance down. And typically these patterns give you 1 to 3 months of bearish momentum after it breaks out. So this break, I knew we were selling. How long exactly, that was in question, but I knew we were selling. So if you take it from 12,643 to 19,900, it gives you about $7,000 in change, and that would put you right around $5,300. So in my last video, I called, well, not video, one of my charts, I called the bottom on Bitcoin at $6,000. Now, mind you, this area here is very subjective, $500 to $1,000 give and take. And I seen this main, this trend line right here in blue that I have right here. So I seen this trend line shooting up, and based on this, I found $6,000 to be an extremely probable target, which it was. So now the question is, are we going to see a lower number from the $6,000? And did we really realize the full pullback or drop down from this triangle? And right now, I'm leaning towards no. We have not seen the full drop down. I could very reasonably see us going through this level right here at 8,100 to 7,800, and then realizing this full $7,000 and change swing down to the low. That would make it extremely technical. And Bitcoin is a very technical pair. And that would bring us down to the $5,300 level. So this level is really interesting to me for a couple of reasons. Not only is it perfectly symmetrical with the pull down that this angle is telling me we should have gotten, we got close. And we had this area. So this was a really good buy-in, and I take this buy-in 100 times. If it would have kept shooting down to the $5,300, I would have been ready for it. But the point is, the argument can be made that we maybe didn't see the full pull down, the consolidation that this descending triangle commands, or demands rather. Statistically, more than 70% of the times, that's what happens. So that makes this area more than 70% likely to be visited. Will it get visited? I'm not telling you for sure it will, but what I am saying is it's more likely than not event that we come back down to this $5,300 level. So not only do we have that confluence, when I say confluence, one thing that's saying something that's consistent in the market, we have major support in this area. We also have this main uptrend line. So if we were to come down and then accumulate down here and kind of coast for a little while and work our way back up, not only will we touch this trend line, but it will also be consistent with the time frame, the time value of how long it takes for this break to accumulate before we work our way back up. So we have the descending triangle, we have the Fibonacci, we have the main downtrend line inside of there, and we also have the time value. So we have 4 things that are saying, this makes sense. Let's go for a 5th thing. The 5th thing is, if you notice, I have this area right here looks a little jumbled, right? Okay, so we have the 0.236 fib. That's from this low to this high. We get the 0.236 fib here. But if you look to the side, we also have the 2.618 fib. They're almost dollar for dollar. And this 2.618 fib is from this low to this high. We get our 2.618 fib over here. That's important to me because as the market forms new highs and lows, you need to follow that in Fibonacci's. And where you see confluence or agreement, where we've seen this right here, that's a 5th reason saying, okay, not only is this fib level right on the trend line, not only is it timestamp, not only as far as the dollar value makes sense with the breakout, in the intermediate price action, it also matches this fib line as well. So those things are all suggesting that there's a very likely chance that we come down here. So if I was to play this market, what I would do, as it's the daytime, so the pullback is pretty natural during the day. I would continue to let the market pull back, and I will look for shorting opportunities. I would pay attention very closely to this $8,100, $7,800 level. See if we got a breakdown from there. If you break this trend line, you will retest and pull back. And here's another thing. I gave you 5. Let me give you 6. So Bitcoin likes to move in threes. Every time it hits something the third time, it typically breaks. Typically. If not the third time, then the fourth time it typically breaks. So every time price comes to a support, resistance, or trend line, every time it touches that area, it gets weaker. So for those that seen this area, if you had your main trend line, which I did over here, and seen it as a legitimate breakout, you really can't fault. I can't fault anyone for that, because that's a 1, 2, 3, 4 break. That's pretty legit. And with that break, we were still profitable. So there's really no harm, no foul there. But long-term wise, we still have more work to do. So we see this 1, we see this 2, we see this 3 touch. Let's look at the other breakdowns. We touch here, we touch here, we broke down. We touch here, we touch here, we broke down. So we're in this area zone right now, and here's the touch of death for not the touch of death, but the breaking touch for this area. We touch this area right here. We touch this area right here. We touched it again right here. That's 3. So if it comes back again, for me, it's going to shatter the ice. It's going to break, and we're going to go lower. So this area that we're in right now is an extremely important area of importance as far as where Bitcoin is going to go. As a trader, I'm looking for shorting opportunities. That's where I believe the market is going to be, where the market pulls up as far up as I think it can go, and then starts to make its way back down. And that's based purely on price action. This right here just kind of gives me a roadmap, a larger frame, a bigger picture of what could potentially take place.
Wow. The first, there's a few things that pop up. The first thing that pops up to mind is the concept of asset allocation, right? Mm-hmm. Don't have all our eggs in one basket, because with everything you're saying, there's a probability it can go up and a probability it can go down, right? So you want to always have some dry powder in the keg, right? Cash on hand. So if Bitcoin crashes before it jumps back up, you can quick get some money in, or even have some, real estate or other assets in play, and, don't be all in, on crypto. Now, I find it, I guess, so the question is, I think, between, if you look at it, I'm looking at the last 3 months of charting you've done. And if I were to just explode, like, maybe last year, January to March for Bitcoin too, I mean, same stuff is happening. And the overall trend is to go up. I guess this becomes the optimization thing, right? So you asked me this morning how my Litecoin was doing. And I'll be honest, I mean, I'm a long-term believer in Litecoin, but I am eating a little bit of crow, because, I probably in the last couple of weeks, I put about 15 grand into Litecoin at an average price of around 210. Now, I'm putting that money in because I'm not going to touch it for at least a year. So a year from now, does it matter if I got into 210 or 190, or I don't even know where it's at right now. Maybe it's down to 180. Probably not, because it'll be $500. But there still is that short-term side saying, oh, if I'd only gotten in right at 190 or whatever on that front. So, I'm looking at this Bitcoin thing. I guess the question is, I think we're both in agreement by summertime, we should be north of, well, let me ask you this. Do you think we'll be north of 25 grand? Is there enough long-term fundamentals to, reasonably make that bet?
Here's the kicker. Bitcoin needs to be at the very, very minimum. Bitcoin needs to bounce here. if Bitcoin breaks below $5,000, I've seen some people with ideas for $3,000 and lower. And this might sound a little silly, but then and only then do we really truly enter a bear market. The reason why it feels like a bear market is because our parabolic run was so massive. But truth is, the person that bought Bitcoin at $900, obviously they should have sold up here somewhere, but they haven't lost money. And we statistically have been forming higher lows, incrementally. So statistically, you really can't say we're in a bear market. I mean, we're in a short-term bearish market, sure. A consolidation, sure. A retracement, sure. But we're not in a bear market. But if we get below this baseline, with this trend line, yeah, then we're in a bear market without a shadow of a doubt. Like we're in a bear market then. So we need to respect and hold at one of these levels. If not, then I could potentially see a really bearish year for Bitcoin and cryptocurrency, which for me wouldn't be a bad thing. We have a lot of altcoins that are jokes. We have a lot of ICOs that are jokes. And I think that, and I hope that on the way back up, we come back a little bit more clean, a little more refined, a little more polished, and the industry as a whole is a little bit more healthier. So this whole down move really isn't that big of a deal for me. But to answer your question, for me to be long-term bullish on Bitcoin, well, I am long-term bullish on Bitcoin, but for me to make that type of prediction, I would just need to see at some point where we get out of this down trend that we're in and we pull and we get a legit bounce and we start to accumulate. That's going to be the ultimate test. If we go below $5,000, I wouldn't say $20,000, $25,000 by the end of the year. But it's crypto, so anything's possible. But technically, I wouldn't put my money on that.
Yeah, I guess it's technical versus statistics and stuff like that. And statistically speaking, crypto has broken every statistic.
Exactly. Exactly. At the same time, at the beginning of last year, I would not have told you Bitcoin at 20K. So, I mean, crypto has done things that, if we're honest, that very few people really predicted. And the people that may have guessed it, it was just kind of luck, I mean, these are some pretty amazing movements we've seen over the last, on the upside and on the downside. The volatility works both ways. We love it when it's going up, but we are just in despair when it's going down. So this actually gives me confidence in the market, if anything. It's just a matter of when. And when I got into Bitcoin, I thought 10 years down the road. So it's not that big of a deal. And as a trader, I'm able to, get in high, sell it. I'm get in low, sell it high, buy back low, sell it high. And so I can get the best dollar cost averaging for my coin. But if I was worried about Bitcoin, I wouldn't even bother. I'll just trade like an asset for fiat profits, for cash profits. But I think it's going to be fine. Are we going to say new high this year? That's really tough. But we will know by the summertime if we want to see a new high or not.
Yeah, no, definitely. So this is the interesting one, right? So are we going to – so I guess the way I look at it is, you're looking at technicals, and there was a recent information going out that, there was a lot of Mt. Gox sales going on in terms of liquidation of old inventory. So that provides then a fundamental reason for why, this downward trend has occurred. Now, the question is, does that influence your technical, how does fundamental and technical come together? Because ultimately, technical is a prediction model or a behavioral kind of, I don't know if that's not the right word. I'm going down the wrong path. But basically, yeah, how do we fuse the fundamental and the technical together, right, to understand how to optimize? Because essentially what we're talking about here is optimization. And there are some people that are going to trade, but for most of us out there, I'm looking at this as like, wow, this is great information. I'm not going to spend, well, first thing, there's no way I'm going to fucking learn everything you say. There's no way I can dump your brain and learn everything you've got in even like an hour or a week or even like months. It'd probably take me years to be able to just even speak intelligently about this stuff. Like I know what I see is I understand it, but like I don't know it. You know what I mean? So, but
Right.
like someone like me who's more of a long-term holdler that would like to get in, you know, optimize 10% here, 15% there, whatever on that side. What are things I can do, or what are things I can look at to try to take advantage of this volatility? Because it's definitely, I mean, I'll be honest, there's that grass, you know, I always look at the other side. Like I see guys like you and I'm like, okay, I know you guys are making money, but I also know that like every time I get into this, I'm going to screw myself. So.
Yeah. Well, two things. You know, people say, you know, buy the dip, but nobody really knows where the dip ends. You know, so it's like back when Bitcoin was 10K, people were like, buy the dip, buy the dip. I'm like, dude, like, it was so annoying. It was so annoying. It's like, even now, people are in the groups, buy the dip, buy. Like, you don't, like, it's so, in lack of better words, sheepish. Like, you have to have some type of rhyme or reason, some type of idea. You can't just look at coin market cap every time it's in red, you throw money at the market. Like, that's so crazy to me. And it's like, you know, and I hope this doesn't offend anybody, but I say that crypto is where stupid people go to buy things they don't understand. That's really how I feel. I'm not a people person. I'm not a great fan of people, but that's how I feel this space has developed for most retail investors. Well, just most mom and pop investors. It's like they've seen what happened before and like, okay, well, this is going to happen again. And then when it doesn't, they come in at 17K, they come in at 16K. Then when the market's at 12K, they're panic selling. So it's really frustrating because I do feel for those people, but I just wish they would exercise some level of that they'll put some attempt into trying to understand the trends in the market. But that aside, to answer your question, traders like myself, we lose money all the time. That's something that a lot of people won't tell you. I lose a lot of money all of the time. So let's make this clear. Let's make this clear. I make money. I make more money than I lose, but I lose money. I lose enough money to make some people not want to trade. So if that means anything to anybody. So it's not this beautiful thing. I'm not just living this life, just trading, winning, trading, and just driving sports cars every day. It's not that. I mean, there's times where I have amazing days, amazing weeks, amazing months. And there's times where not so much. And it's not that the system has changed. It could be little things. I was in a Bitcoin trade, a really good trade some time ago. There was a market spike, and I lost some money on that. My stop loss was a little bit too tight. So these things happen. You know, you can, and as I've told you in the last video, it's not just about the trading system. It's the implementation of the trading system. So sometimes I can make mental errors, even though it's a great trade, but I can make mental errors and end up losing money because of that. So we have to keep things in perspective. That's the first thing. Traders, successful traders do really well, but most traders lose money, to be very clear. And then secondly, for the common person is to learn some type of big picture frame of where the market will go, not within within an hour, not within a few days, like within a week, within a month. Say, okay, this is where the market is going to be. Well, based on my research, based on experts that I rely on, this is where the market is going to be. And this is where I'm going to start layering my buy orders. So that if they do that, if they do just and only that, they'll see their cost average on any crypto come down significantly. And I don't speak highly about most traders because most traders aren't that great. It's interesting. I met some really good traders through the Black Crypto group, but most traders really aren't that great, and I don't really respect a lot of traders. But even if you use some type of resource, you pull something together wherever it is, you check a track record and say, okay, this person was right most of the times or whatever it may be, you can use that as a tool. I wouldn't say day trade it, just buy at the lower of the lows and and bring your cost per average down. And over time, that's if you believe in Bitcoin, you believe in crypto. And over time, the next 5-10 years, I think you'll be thanking yourself that you at least put some effort towards understanding trends in the market.
No, definitely. Hey, let's dive in a little bit. Let's go a little micro. Let's go into like a 7-day of the current trend lines and things like that. Let's do things a little more relevant.
You mean well, if you want to go micro, you want to go smaller. You mean like an hourly chart, a 4-hourly chart?
Yeah. Sorry. Yeah. I'm not using the right term. So let's look at it. Yeah. Let's do an hour. Yeah. Something like this. Let's go a little closer. Yeah. Something like this, right? So here we are. And for people who want to know, right? So 2 days ago, 2 days ago when we were last on, it was what, the 7th? Was it the 7th? Yeah, that was 2 days ago. Bitcoin was at 10.5 or whatever. It had just come down, and you called like 7 or 8, right? Or you said there was a pretty good chance that it would drop more.
Right.
So now it's dropped. So now, and you said at the same time, though, you'd also said there was like I remember you saying this. You said that this was 2 days ago. You said there was like a 55% chance it would go up and kind of call it. And there was a 45% chance that it could drop. And because of that risk factor, for me, 54% chance sounded pretty good. I'm like, I'll take that bet. But for you, that was too risky for you, right?
Yeah, it's way too risky. I mean, and here's the thing. And here's the reason why. I like to draw things before they completely develop. Because if you see something like and this might sound like a whole bunch of jargon, so you have to just bear with me, but you might see like a bull flag or a head and shoulders or a cup and handle. So when those things fully develop, and all these things are just formations in the market. So when these things fully develop, it's really easy to take a position and say, hey, this is what this is, so this is why I'm doing it. It's more challenging to say, this looks like it's forming a head and shoulders, and if this takes place, this is what my position is going to be. So it takes a little bit more foresight to do that. So yesterday, the day before, I can't remember what it was, it looked as if we're entering or creating a channel, which in traders or technical analysts would say is called a bullish pennant, which is a very low probability trade. I don't trade on bullish pennants. The times that I've done, I've lost money. So it's really not a setup that I particularly like. And it doesn't give me the odds that I need. I need at least a 70% better odds in taking the trade, and at the very, very minimum. And that's just me personally. People have different requirements. So I did take a buy. It was more of like a scalp. I only held it for maybe a day, I think, or intraday trade. I took a buy from like 10.2 on or something like that, and I sent you the screenshot on that and how that worked out. But there was an opportunity for it to fall. But where we were in the market at that particular time, I had to say, hey, listen, this looks like it's developing. And if it does develop, then we have, and I went a step further. This is things that people normally don't do. I said, if this develops, we have 30 days before we break out. I said it very specifically. And I said, if it doesn't, we could drop any day. So I gave a zone of where the breakout to the upside would be. And I gave a zone where the breakout with the downside would be. This doesn't happen. People aren't doing this. And I share these things willingly because I have no issue being scrutinized or have no issue. I really enjoy, for the most part, conversations and different views from different people. But in that, I just kind of wish that while we're doing these things and the few traders that I do respect that I have met from the group, they share the same sentiment. Like, it's one thing just saying the market's going up, the market's going down. Like, what does that mean? What does that even mean? I don't know what that means. But can you tell me what your risk to reward on this trade is? Can you tell me where your stop loss is? Can you tell me when you expect this trade to move? When you expect this trade to break down? So these things separates, the adults from the children, the doers from the pretenders. So when I give this information at first, I was like, I'm just going to give a scope. And then I started attracting some more credible, well, I should say credible, some more developed perspectives from individuals that have traded. So I started offering more developed charts, not an issue. And when we do these things, you know, iron sharpens iron. I could benefit from them. They could benefit from me, and we could challenge different ideas. But if we're going to have a conversation about trading and to get my respect, just to tell me, oh, it's going down, that gets no respect from me. Like, okay, what does that even mean to me? That means nothing to me. When is it going down? At what dollar? What are we talking about?
Nice. So we basically, okay, so I'm going to go back. There was a post you made, right? So, you know, let's talk sticking out the neck and seeing where we're at now. Hold on, let me share my screen and make sure we can all look at this. Let's see. Can you see my screen okay with your post?
I'm looking at it.
Right. So this is literally day or two ago. You said 55% chance of breaking to the upside. Can I like enlarge this chart? Let me just see. Yeah, this is where we were, and this was yesterday. And now since then, the bar has dropped. It's actually probably what, if I were to
write, it's like at $9,000, something like that right now, or
yeah. So let's draw out what happened since, because there's nothing like, you know. And I love the fact that you put your neck out, right? Because everyone's always going to say, yeah, maybe, but you know, you're definitely holding yourself accountable because it's not immutable, but the record is there.
Of course.
Since there, it looks like what we hit. What's going on here? Sorry, my drawing tool is not working properly. Let me undo this. Clear all drawing. Okay, let's go back. We are going to not eraser, format, spotlight, draw. There we go. Okay, so since then, we hit this. It's not working for me. And then we came back, we've come back up. Oh, no, we're not at 9,000. We went like, you know what, it might be the Facebook thing. Let me like screenshot it so it's like an image file or something. Okay. Let's go back to my drawing thing. Give me a second. Sorry, mouse. Okay. So we were here. Why isn't this working for me? We hit this, right? We basically hit this late last night, and now we're sitting right around here.
Yeah, we didn't drop that far last night, but to speak to your point, and for the ones that are listening, is that so that you guys, well, matter of fact, let me finish. I think he was leading somewhere.
Oh yeah. So we hit here. So now this trade's obviously off the table because I'll do this in blue, right? This was your 55% chance of Bitcoin hitting 14 grand. So that's off the table. So now that this new data comes into play, and I'm just illustrating this because personally, I want to understand how you think, but I think it's helpful for other people to see like how to look at this, right? So you had one setup here where based on information yesterday, if it bounced and recovered, it was going to go up to 14.6. Now it's dropped, it's hit this, and now it's forming this like secondary line or whatever that you drew out on that side, for that, like the triple hit the ice thing or whatever you talked about. How does this information now influence your view? What does this data tell you, I guess is the question.
Yeah, so obviously that bullish pennant either wasn't a bullish pennant or at the very, very minimum violated the bullish pennant. So on a smaller time frame, I was looking at a 12-hour time frame, which is still a pretty credible time frame. If you want to run back to your chart, that might be a better one to look at because
then you can talk. So if you want to maybe run back to your Bitcoin chart.
Let me see if I could. I'm going to delete this. I'm going to delete my chart, and then I'm going to draw that chart again. Let me see. Go to the 12 hours. I'm going to delete all of this and just give you guys the pennant. So the pennant is whenever price goes all the way up, which it has, and it starts to form lower highs, which it did, and at the time, this was the lower low. So you could see the market came down here, pushed up. I hope you guys can see where the market came down, pushed up, and then it came down again and pushed up. It kind of gives a little indecision candle right here. So there was a possibility, and this is kind of rough. I'm just trying to throw something out real quick. So there was a possibility that we were going to range like this. So this was a pretty early, call to say that this is a true bullish pennant, but it looks like the formation of it was beginning. And if it would have held, it would have moved like this sideways for a couple more touches and then broke out towards the upside. So that's how that would have worked. And in the group, I also mentioned, because it was such a low probability event and it was still developing, that the safest thing to do, the strongest play, was to wait for a breakout of this trend and then a pullback. And if you notice, we broke out, and it's really hard to see on the 12-hour time frame, but we did pull back up a little bit, but since then we dropped straight back down. So we can see a small little pullback again, but I don't think, and we have some support here. So if you're trading on the 12-hour time frame, there was opportunity to get into this market, especially if you're trading on a smaller time frame than that. You could have taken this trade. There was opportunity there. There was some other telltale signs as well as far as this trade is concerned. But this is really, if you're not familiar with these patterns, it's a higher risk event than normal, because you've seen some lower highs here, some higher lows that was potentially forming there, and we have support right here. So it's not an ideal trade. And again, when I say the ideal trade, and let me illustrate this, guys, so you guys can see. So like we have support right in here, which we came to. So if we broke down.
And just to clarify, you just drew that box, and I know there's a method to a madness, but for someone who doesn't know anything, it just looks like you just drew a box.
Yeah. So let me just so support, let's just say, is right here, right? Let's just say this. Let's call this area as support. So support is where the market tests and rests and push from. So resistance and support, where the market kind of hits a ceiling or the market kind of hits a floor. So the market hit the floor here a couple of times before it broke down. So let's just say this area as support. Just follow me as that. With a breakdown from here, we don't have a whole lot of room to fall before we get to support. So so you will have a high probability trade, but at the same time, you're not going to have a lot of particular ROI to catch or gain in this particular event. And you can see that here as the market shot down and bounced back up. Now, I do believe the market is going to continue moving down just based on probabilities. But if this break isn't a trade that I would have particularly taken, and I didn't take that trade. So I want to see more things develop in Bitcoin. But if we get a pullback to this area and we start to sell again, then I'm definitely going to get in. And here's the reason why. As you can see, as this line moves upwards, it gives price a little bit more room. So where price was really tight here, it's going to be more loose here. So if price was to consolidate and retrace back up a little bit and then shoot back down, that's a trade I take. So I like to trade in what I call back to the wall open skies, or back to the wall free falling is basically where I have very little room to go back and I have a lot of room to go forward. So I don't take every trade. I don't trade a lot. But when I do trade, I try to look for high probability trades with a lot of upside. So that puts me out of the conversation in a lot of trades. Tons of trades, great trades I don't take every day. I miss them all the time. So everybody has their own philosophy on what they look for. What I look for is a certain risk to reward and a lot of room to move in one direction or another.
Nice. So the moral of the story right now is before we make another prediction on Bitcoin, we need some more data, essentially is what it is. But if the data proves favorably in 4 days, there could be a high probability trade if we just kind of sit in that zone that you have more up. What was that term you used? Price upswing or something like that?
Here's the thing. It's all about levels. So it's like, what levels do you want to trade from? You know, everybody has their levels. So it does, if we're in the middle, and you might hear this term chasing price or chasing the trend. So just because Bitcoin was moving here, it doesn't mean I need to jump in a trade. So everybody has levels they want to trade from. And just to give you an example, so for some people, that level may have been right here around support. So they may have waited for a price to get to this area, especially if they were going body to body right here, something like this. It doesn't show all that well in the 12-hour, but if they were doing something like this, then this could be a trade area, a trade opportunity for them where they had a lot of downside. On the opposite side, for some people, they're waiting for this neckline to break, where we bounced here and we broke down here. And now they're waiting for a pullback, and they believe that we have a huge shorting opportunity down on this leg. And statistically, if you see this as a double top, then we would have a few $1,000s to drop, a couple $1,000s at minimum. So it's all about how you like it, how you like your trades, how you like your market. There's certain things that I look for specifically that I share, and there's certain things that I don't share that I particularly look for. I like to trade the trends. You know, the market, they say the market is trending 30% of the time. So 70% of the time, I'm not in the market, while other people will trade that 70% activity. So I look for high probability trades in trending markets. So that kicks me out of a lot of trades, but the trades that I do get in, they're usually pretty rewarding for me. They're more often than not. So it's all about how you want it. There's people that could have traded all of this, and that's perfectly fine. I took a small little day trade in here just because it was a really good setup, and that's fine too. So you don't really, if you have a trade plan, trade your plan. You will hear that a lot in trading. You know, you have your trade plan, trade your plan. For me, if I see a nice pullback and bounce from here, I'm in that trade all day. And what I'm looking for, you know, and I'm giving away so much, but what I'm looking for is just the market to create levels. Not only to confirm that we're going lower, but based on the price action here, it will tell me clearly where to put my stop losses. So I know where my risk is. So the market might not even touch up here. It could just shoot back down, and I might just miss it. And I explained the last video, those type of things are okay by me. So it's all about where you want your trades, how you like your trades, the levels you set forth, and your personal trade plan. And if that trade plan is a high probability trade plan or not. Wow.
Well, you've definitely given away a lot. I know you're kind of holding back a little bit because you've got so much knowledge and everyone's like, man, we want more, we want more. But one of the things we're working out the details on, I'm going to kind of let it slip, is we've got our upcoming conference that Dr. Boyce and Lawrence are going to be running in Atlanta in May. All things crypto. We're going to talk, fundamentals. We're going to talk research, and we're trying to get Yusuf to come out and maybe even teach a class on trading and charting and all this sort of stuff. Because, I mean, I know enough to be dangerous, but I also know what I don't know. But I do know that you're making a lot of money here, and I'm not. So,
and I'm also losing a lot of money, Charles. I want people to know this. I'm also losing. It works both ways, guys. It works both. Any trader that tells you they haven't lost a lot of money has not been trading. And if you follow traders, whoever it is, they will tell you stories of blowing accounts after accounts, 100 grand, 200 grand, so on and so forth. So we call it tuition. And trust me, I paid my tuition. When I say I paid my tuition, I went to school a few times. Same class. Like, Yusuf, you're here again. Like, yep, sign me up. Pay it again. You know? So I've definitely paid my dues. If there's something I could share to kind of alleviate some of those pains for the next person, I'm more than willing to do that. But I'm also very honest, and any excellent trader is not going to tell you exactly what they do to acquire the success that they have. They will not do it. They'll sell you the watered down version, but they won't tell you their specific trade plans or movements. And I'm no different. I will help people get great, but I'm not giving you what I got. I'm just not doing it. But I will help you be very good or a lot better at the minimum.
Well, you don't want to create too much competition, right?
It's not even competition. It's the more people that are doing exactly what I'm doing, then the technicals change. The technicals in the market will literally change before my eyes when I start putting out my trade plan. So when you see these traders, they sell their book for $49.99 on the shelves. No, it's too late. It's too late. Whatever they're giving you, it's probably good stuff, but the real stuff is too late.
Yeah. No, wow, that's great. Well, it looks like, people who are still on, if you're on the Facebook Live, it looks like we still have 40 or so people on. Give us a few likes. Give us some, give us some, or not us, give Yusuf. Let's give him some likes. Let's give him some loves. Let's get him out there.
Let me base it the love. Let me base it the love.
He gets the love. We can hopefully get him out to Atlanta and have him keep spreading the love on our end. So wow, no, this is awesome. This is amazing. We definitely need to do this on a regular basis. Let's talk offline about scheduling some more time and getting on and everything. And I know Dr. Boyce. Dr. Boyce doesn't like to trade, partially because he's a fundamental investor, right? So it's like there's these two worlds of things, but he does respect traders.
Oh, you know what? That brings me to your question. You asked about how much fundamentals matter to my technicals. I didn't respond to that.
Yeah.
But it doesn't. It doesn't. Honestly, I'm buying Bitcoin, and when it's going up, I don't know why it's going up. Like, I will literally be in a trade, and I'll go to a group like, does anybody know why Bitcoin's going up?
Well, and that's the thing to be mindful of. And I think this is where people get goofed up. Because we have been known to take advantage of signals and technical analysis on what might be called, the term shitcoins, right? Mm-hmm. So, Dogecoin, for example, there is no fundamental basis behind Dogecoin, mm-hmm. but there is a technical basis around Dogecoin that you can make a lot of money.
Very much so. Very much so. Yeah, I mean, even when I was selling it just now, I had no idea why I was selling it. Yeah. I had no idea. I mean, you could see comments in different groups like, why is Bitcoin dropping? Anybody have an idea? Like, I don't know. And honestly, when I do allow fundamentals to play into my technicals, I lose money every time. That's the truth. Every time. When I hear something like Bitcoin is doing this, it should go up, and I look at the charts like, well, it says this, but it looks like it should go up, so I'm going to change this. Every single time I've allowed fundamentals to play into my technicals, I've lost on Bitcoin.
Wow.
So I disconnect from every group, every channel, I cut all that stuff off when I'm trading.
And that's because that affects you emotionally on that front, and then you don't look at it.
It plays in your head. It plays in your head for sure. So I don't listen to I cut everything off when I'm trading.
Wow. It's too bad Prince was unable to make it this morning. He was up late editing a video, but he wanted to actually talk about this because he wants to learn to trade, but like he's all about like the mental side of things, right? You know what I mean? But yeah, I mean, it sounds that's exactly the case. You're like in the zone. I don't know if it's Zen or whatever's going on. You're in the zone. You're looking at the data indicators. You just gotta do it. You just gotta do it, man.
Yeah. That's it. The market says it's selling. I'm selling. I mean, I don't know why, but if it's selling, I'm selling. Wow. And it's so interesting because there's times where I would sell Bitcoin and like a day, or I might find out a piece of news like a day or two later. I'm like, oh, that's interesting. It's like, and that information may have been available beforehand, and maybe it played a significant role. But it's always after the fact. Because whatever's happening out here in this world is going to show in price.
Yeah.
Price will never lie. It will never lie.
Wow. All righty. Well, geez, thanks a lot. We're definitely going to have you back. We're going to try to make you a regular here. I think everyone's loving this. This is great. I'm loving it. I'm eating it up. I'm out there saying, keep in mind, before you go do trades or anything like that, I get excited about it, but I'm a paper tiger here. I'm going to live vicariously through people like you, Yusuf. Watch you guys trade and, cross my fingers and hopefully I don't lose too much money. So
it's part of the game, man. The more money I lose, the more money I make. It's all the same. No problem.
All righty. Okay. Well, hey, thanks a lot. Thanks for tuning in, everyone. Have a good day, and we'll be in touch. Talk to you guys later. Bye-bye.